Mortgage and mortgage interest. Let's talk about the problem with mortgage interest. Let's talk about how mortgages are probably one of the highest interest paying things that you will ever pay in your whole life as you go through different purchases of a house. So let's get right through the presentation here. This is a business that they have a mortgage of $576,000 on this business. So it's got, multiple rooms, levels, all that stuff. And let's talk about the amortization schedule. This is the payment schedule that the mortgage brokers don't really want you to look very closely at, because there's something happening within this payment schedule that reveals to you what's actually happening on how all of your payments work when you have a mortgage. Let's scroll through to a real deal amortization schedule straight from the Royal Bank of Canada. And this was printed when there was a 3.89% interest rate on a fixed mortgage for 25 years, renewable after 5 years. And you can see there the payment amount is $2,995.63 per month on $576,000. But the thing that I want you to take a look at is actually a little bit closer here. Let's move in a little bit closer. And in year one, you can look down here and see that the interest is $21,000 and the principal is $13,000. So the thing about all of this is like you look at the percentages that we have written down the side here: 61.15%, 59.62%, 58.04% as it goes down. Now the interest is $21,000, $21,000, $20,000, $20,000, $19,000 as it goes down the list there. This is compound interest, and it's in reverse, and it's in favor of the banks. So in those first years, that first year, you're actually paying 61% interest within your payments of that almost $3,000 per month that you're paying. The $21,981 is the interest that you're paying in that first year. So the banks are really excited about locking you into this payment schedule where they're getting this compound interest in reverse. They're getting all their interest at the beginning. So 61.5% is pretty crazy. So when you get to the end of these 25 years, how much did they pay? Well, they paid a total interest of $322,000. And that's an effective interest rate over the course of the 25 years at 56%, not 3.89%. So with a traditional mortgage, with a real amortization schedule that we got from the online calculator, it costs an extra $322,000 in interest in order to borrow that $576,000. So let's take a look at another type of mortgage that you could get into here. And this is one that we'd like to talk about called the Manulife ONE mortgage. And it's a different kind of mortgage because it is not based on you making a specific payment every month. You can pay in as much as you want. So here's the current way. The current way, they end up having that $332,000, and it's going to take them 25 years to pay off everything. But if they were to move over to a Manulife ONE, the total interest paid would be $204,000, and they'd pay everything off in 14 years and 8 months. That means that they're saving, you can see at the bottom there, maybe I'll make it even larger. You can see at the bottom, $118,390 is what they would save, and they would have everything paid off in 10 years and 5 months earlier. That's awesome. That's awesome. You think about all that. So what does that mean for us here? That means that this home that was worth $900,000, that had a 400 or 500 and or this business, I guess, that had worth $900,000, it had a mortgage of $576,000. The borrowing room that they have is in the green there. There's no other debts. and they would be able to pay off this business 10 years sooner. That's crazy. 10 years and 5 months. So how does this all work? Well, it's a full explanation of the Manulife ONE video is available in the description of this video, so you can go watch their Manulife ONE video. But the whole premise about this mortgage is that it actually is not really a mortgage. It's more of a line of credit that uses your house as collateral. So you take everything that you make. You take all of your savings that you've been saving over here and making a little bit of interest on. You take all the money that from your paycheck and you put it in. You put it all into this account. You pay down your mortgage immediately. All of your money goes in there and it's saving you money in interest. Then when your bill for your hydro comes and your bill for your gas comes and your bill for all your different things come, you pay them out of this account. This is an online bank account that you do bill payments from. You pay for your credit card bills. You pay for everything else, all out of this account. You pay for your gas. It is attached to a debit card that you can use to pay for anything, anywhere, and away you go. So you're immediately putting your money in there. It's saving you on interest on a daily basis as you're going through. And then as you need to spend the money, you spend the money to go through life and do whatever it is you need to do. But because you're saving yourself on interest each day by having your money in there in the first place before you spend it, it's saving you on interest. And that's how they project that this will get them 10 years and 5 months less payments. So they'll pay it off in less time and save $118,000 in interest. Pretty amazing stuff. So if that sounds interesting to you, then you will likely want to learn more about this and connect with us through our website. So either connect with us and we will hook you up with the right Manulife ONE representative, or you can go ahead and just go through their website and connect with them that way, and they'll forward you on to the appropriate Manulife ONE representative that can get you going. We do get a small commission for doing it, but that's not why we're doing this, because this is one of the best tools that we've ever used in order to actually get people out of debt faster and have more flexibility and more power with the equity in the value of their house. So stay tuned and subscribe as you need to in order to keep track of all these awesome things that we're coming up with.